All right. Good morning, everybody. Waiting for a few people to join. Excuse my sniffles again. Got allergy season. Okay. Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of May 30th, 2024. Just going to do a little bit of a kind of a recap of what we're looking at and what the market's doing since we didn't get a Monday evening commentary. Real quick, what we talked about last time, Under Armour and Baidu earnings. Under Armour had good earnings, cautioned about uncertainty in the future, and of course they went down. But you know, they've done a lot better than some other companies. Let's see. I wanted to look at just to compare with some retail. This isn't retail, but it is kind of connected a little bit. This is Salesforce, new customer relationship management software. Man, look at that. Had bad earnings, just completely blew through all sorts of support levels. Let's just look at this. I'm going to use the poo color here. This one, 250. Probably some more under here that we would need to stretch out in time for. 230, 220. So just even number support levels. Don't know why we don't have our normal things we have on. Let me update. But my goodness, that is awesome. And then we had trying to remember the ticker symbol for Kohl's. Yeah, just kind of going along sideways. Just a crappy retail store hanging in there. Boom! Down to $20. Holy smokes. Just got smoked. So suddenly, Under Armour's earnings aren't looking terribly bad right now. Well, because they weren't terribly bad, they beat top and bottom line, but compared to some other retail and even a tech company, geez, they're doing okay. Better than is expected across several other companies. Have that resistance level at $7, but we got above the 50-day. Certainly haven't taken a big dump. Of course, this was the day after their earnings, but they rallied all the way back because people realized how dumb it was that they were down getting beaten up so much. But I was looking at some of those this morning and just thought that kind of was interesting to compare with what's happening with Kohl's, to compare with Under Armour and other retail. Suddenly it looks pretty darn good. Don't want to go over Baidu again. We talked about that. Not anything much, although just to show you, coming down from 110, and we are at this point pretty much making up dollar, not pretty much, we're making up dollar for dollar on the way down as we protected through earnings. So it could either stop here where it kind of looks like it's going. This, what, $98 price at one period where it got all the way down to 95. So it could keep going down there. But at the moment, it kind of looks like it's staying at this $98 support level, where at some point here, we'll be able to cash those puts in for a nice profit. So just a little thing to brag about, but I love seeing puts make up a good portion of that downward movement on our stocks. What are we looking at? Before that, I also wanted to look at Target. They also had a big bomb on their earnings, and they've been kind of slowly coming back. Did well, looks like, on their March earnings, but really they just pretty much came back to the point they took off before those earnings. Real big fall from 155 all the way down to 130, 140. Just trying to point out some positives on Under Armour compared to some other retail stores. Now I know that these are, you know, both grocery and clothing department type stores, Target and Kohl's, and Under Armour is a retail brand, athleisure, athletic wear, sports stuff. So it's not a perfect comparison, but I mean, geez, compared to these stores that have all sorts of products we really need, and, you know, cheaper clothes, discount items, Under Armour, it's incredible that in spite of all of the shortcomings, doing pretty decent on this earnings where others have failed. Let's just look at Under Armour real quick. Oh, we already did that. Pretty much sideways. Bear with me. All right, so what are we looking at? Looking at protecting stocks as the stock market, as S&P is turning over. Just to look at the market, topped out at 53.33. Let's see, 53.41. Hit that, almost hit that 53.50 mark, and started to turn, and probably looking at somewhere around the 50-day. This might be a support level, although it's not right now. Previous high, 52.50-ish. So it's kind of holding that, but what do we got coming up tomorrow that will change one way or the other what the market's doing? We have our PCE inflation numbers coming in on Friday, which is tomorrow, which means if we get those PCE numbers coming in lower than expected, the market will likely take that as a positive, might turn back to the positive. If we get higher than expected, then the opposite will be true. If it comes in line, it's kind of a crapshoot. Maybe maybe it just might go the third way it can go, which is sideways. Stop there. But usually even sideways, it starts to kind of slowly continue to go down. But the market is not liking that the Salesforce numbers, the CRM, really struggling, that stock, and that is one of the big things pulling the market down today. So that is pretty much it. We've got only a few stocks protected. Disney, we got protection on through earnings, and of course they came down from 115, 116. I wouldn't expect them to fall below 100, so that seems as though it's a big support level. It has been, at least in the past, even though it's not really showing that part right now in this chart. You did get it on the 23rd, touched it exactly, and starting to build a base a little bit. So we'll see what happens there, but along with Baidu, those Disney puts will be a nice one to have profit from. Also coming on the oversold period here. Not period, but getting oversold on our RSI chart, which tells me that we should have some big money seeing this as a discount and throwing a little money there at Disney. Bank of America started to turn over yesterday. we got 39 strike puts on, and that looked to be pretty smart as it came down and touched the 50-day today. It is just one day, but it is holding that 50-day. But because we have those PCE numbers coming in tomorrow, likely just going to wait and see what happens there before we take off any potential profit in our puts. But as other stocks were holding up yesterday, when a lot of stocks opened up at the down 1% yesterday morning, we saw those patiently waited and watched those stocks come back up, but Bank of America pretty consistently stayed to the negative, little over percent. So that was the decision there. Glad we'd done that, at least today. Might change my mind tomorrow. Kevin and I had the discussion, well, what about Apple? We might need to get protection there. That was a couple, like last week. I just thought that it was coming off of overbought, and I'm glad we left that alone. Kind of coming back up to highs, and I'd sure like to take some profit on shares on Apple when we get closer to the 200 level. So we'll see where that goes. But it is holding up rather nicely. Guys, I've been rambling on about this and that. What concerns or questions do you have for me that maybe you didn't get answered on Monday because we had the holiday and didn't have our webinar on Monday? What can I look at? What can I answer for you? All right, well, quiet group today. Sounds good to me. I will take that as communication that you guys love everything that I said and are completely content with everything we're doing here at Hurley Investments. So thank you. Hopefully I'm getting a couple chuckles out of that. But yeah, that's what we've been up to. That's what we're still looking at. Market seems to keep going up, and now we're starting to turn. And a couple things we're keeping our eye on with the inflation, which has been obviously, as you guys know, the big number one thing over the last couple of years. So those PCE numbers will come in tomorrow, and that will give us a better idea of what we need to do. We need to protect further with some other stocks that we have kind of let run. I mean, geez, Micron has been on such a wonderful run, and again, we could see Micron way up at one. If you put in the 6 billion or so that is supposed to go to them from government investment to boost our chip stocks, that should be up at around 180, 184, or something like that, if you add in that pricing. And so that people still aren't pricing that in as much as it's come up as it has. Marathon kind of bagged at it recently, but I think at ConocoPhillips, if I'm not mistaken. I think it was Conoco. Came out and news broke that they are looking to acquire Marathon Oil, which is why you see this bounce from 26 all the way up to 29. It's paring back with maybe a little bit of profit taking, but that is pretty awesome to see. Couple things going really well for us this year that outside of I guess meta last year, we've been patiently waiting for things to come around. So thanks for your patience. Some good things happening in spite of the market circumstances. All right, guys, I'm not seeing questions, so thanks for joining me, you guys that are here. I think we're in a good position for where we're at in the market. I think we're in a good position for later on down the year with a election year. I think we're sitting in a good spot. All right, guys, take care. Hope your summer is getting started off nicely. I know mine is. Kids are finally out of school. I'm looking forward to it. All right, guys, take care. See you next time.